Well, happy weekend, everyone. I'm actually recording this shortly after the close on Friday. Just want to kind of get it out of the way and tuck it away for Saturday. Um, Here's the ES for the past 10 days. These are 10-minute bars. And I'm doing this incidentally before, as I'm talking in 6 minutes from now, the S&P supposed downgrade is supposed to be coming out or something. But so maybe by the end of I record this video, I'll see the news. By the time you listen to this, it'll be ancient news. But so anyway, here we are. And this one graph basically tells the market's whole story, even though this is only 9 trading days or so. This line here at 1283 represented the breakout. That is the neckline for that big pattern, which in the most bullish circumstance could push the S&P to like 1425. And the market excels at one thing these days, which is frustration, because, breakout, ease back and back to the neckline, and then again, kind of shore things up and breakout, and then plunge, down we go, and then, okay, we're going to try again. Here we go, going to try, but no, boom. And then up this again. So from the bearish side, the bearish good news, if you want to call it that, is that the attempts by the powers that be to keep things short up seem to be not going so great, because Friday alone, that is today, as I'm recording this, they really seem to be letting things slip. This was a really big, 20 plus point reversal. And on the bullish side, the bulls' friends in Washington will come to the rescue every single time, because as we look at these bottoms, it's like, this one was like at 3:40 in the morning. These are, by the way, PST, so just add 3 hours for EST. Over here, we've got 7:40 in the morning. Over here, we've got 7:20 in the morning. And so when things are going down, and then I see folks saying, buy the dip, on the one hand, I kind of know they're right, and today is a great example of the fact they are right. On the other hand, I refuse to do it, because, there will come a day when, let's say I did buy the dip. All right, let's just, for the sake of argument, say that, down here, you cover everything and you go long and you're, join the buy the dip crowd. What if things keep heading lower? That day will happen. There will come a day that the dip is bought and it gets dippier. You'd feel pretty stupid, wouldn't you? Well, I certainly would, because the shorts that I do have are very carefully selected and take a lot of work. And to cover them all and to plunge headlong into the market in a bullish stance just because there have been these recent instances of buy the dip is, empirically, it's been true so far, but to me it's not rational, and I am rational to a fault. The irrational chaps who did buy the dip just because you always should buy the dip did great. The ES had been down really hard, down to like 1272, and closed down a mere 2 points. I'll also mention that, and let's back this up a bit because you're probably tired of this graph by now. Out of an abundance of caution, I had over the past week established a long spider position as a kind of persistent insurance policy. And I sold that out round about here when it was clear that we weren't going to be in breakout mode. And I'm glad I did, because it really started falling hard after that. My point here is that this pattern is looking messy. And the certainty of this thing just blasting off to 1425 is diminished somewhat. If things get soft, there are a few levels to watch. First and most obviously is the low from Friday. Second, and more important, is the low from the 5th of January. If we take that out, that'll give us a new low for the year, and also will really so badly damage the pattern that the risk of it pushing higher is much lower. And just to be wistful dreamers here, if we get really weak, this is the line to watch. This line's been in place ever since we bought them back on October 4, and we would need to cut beneath, like, by the time it arrives, I guess 1225 or so, for that to be the case. But that's a long way off. That's a long way off. So let's not even go there. Let's just take it not even a day at a time, like a tick at a time at this point. So things are still very uncertain right now. Bonds, I think, if anything, are kind of suggesting that the equity bear side might not be a bad place to be, because these, in spite of the strength in equities all year, these likewise have been kind of shoring up and firming up, and a break above the December 19 highs would really validate that all the way, and that would really show we're in risk-off mode. Instead of boring you with the usual, analogs and the, HUI and all that stuff, I just wanted to pick out I've got about 16 or so symbols on the short side that are my favorites right now. And let me just walk through those. And these are in alphabetical order. So just sharing a few of my favorite shorts. AGCO. We've got a broken trend line, and I've set my stop just above this bar. ALL, Allstate. We've got, it's not a great topping pattern, but it's not bad. I've got this 29.33 as my line in the sand. BIDU. We've got a pretty nice diamond on this one, and in some of these cases I'm using Thursday's high as my stop. CTB, this is Cooper Tire and Rubber. You can see here the very big pattern that broke and we retraced to that gap. Dow, DOW, Dow Chemical. Bit of a similar situation here. This and a big break, and then a recovery back to that line. DXCM, I shorted this earlier this week. I stopped out at a loss when it shot up on Wednesday, but I'm back in. Small position, probably my smallest position of all of them. ENS, this is Intersys Common Stock. I've got my stop here. If I get taken out there, I will simply move it to a watch list and wait for it to push back to this price level. ETH, Ethan Allen, this is furniture retailers. Got my line in the sand right at this level. EW, Edwards Life Sciences. Broken channel and a series of lower highs. So using 74.63 as my stop on this. Low, LOW. I just leapt forward in the alphabet there. I'll cycle back. Nice, gentle series of lower highs on this retailer. IAG. This is I guess a gold miner. We've got a stop here at 1783. Nice broken trend line there. Nordstrom, JWN. Moving just gently down, but even this year, I mean, the fact that it's kind of easing its way down each day, that's pretty cool, especially in a market this strong. MHK, Mohawk, at the top of a rather long-term trading range. Pfizer, also at the top of a pattern, and a much more mellow, slow-moving stock. RS, Reliance Steel and Aluminum. We have, I guess if you squint, you could call it a head and shoulders pattern, but I just like the fact that we've sort of worked our way back up to this high from May 2010. SFG, Stancor Financial Group, gap play here. And lastly, SIAL, substantial diamond pattern here, I haven't drawn it, but kind of similar to what we saw back here. Pretty tight stop on this one using Thursday's high. This would have to, and as a counterexample, Coca-Cola had been in a similar diamond pattern, and it was a continuation pattern, not a reversal, as you can see. So it pushed higher, and interestingly enough, we had a shooting star here on the candlestick, and it retraced almost to the penny back to its breakout point. So kind of technical analysis in action there. All right, well, looking at my Twitter feed, I guess there's still no news yet. Well, you'll know by the time you watch this. So have a good long weekend, and I'll see everybody back on Tuesday. Enjoy. Oh, and click some ads.